Unit 9 deals with insurance issues, and this is not something that you will see a lot of on the test. It's also not something that we get very deeply involved with as agents or licensees in the transaction. But just because it's not something that you're going to see a ton of doesn't mean it's not something that you don't need to be aware of at all. So you do need to have an awareness of insurance issues and how they might impact these transactions. Um, the basics of insurance that you might be tested on. Number one, if you own real estate, you should have what we call hazard insurance versus not having it. I know that sounds silly to say it. You should have insurance versus not having it. That's going to be tested. But here's how it's going to be tested. They're going to try to make it overly complex. You know, Jordana sold the house last week, but she's renting it to tenants, or she's renting it back. She's the tenant. She sold it. She's renting it back. Well, who should have insurance on the structure? Is it Jordana or is it the people who bought the house from her last week?
The people who bought the
People who
house.
bought the house, yeah.
The people who bought the house. The fact that they haven't moved in has nothing to do with the fact that they need insurance on the structure. Does that make sense for everybody?
Yeah, they
Right?
still own it if it burns down.
They still own it. Now, Jordana might need to have renter's insurance for her things while she's renting the property because she no longer has homeowner's insurance either because she's no longer a homeowner. Does that make sense for everybody? Right? So it's just a simple statement to say, as long as that you are the owner of the property, you need to maintain hazard insurance on the property. And that includes while it's under contract, all the way up to the moment of closing. And remember, the moment of closing is not the moment you leave the closing attorney's office. It's not. In fact, y'all remember I mentioned to you on Monday the disaster situation I was talking about with the house that didn't fund and the
what happened?
What's the scoop?
Well, I just found out that you talk about adding insult to injury. The sellers also screwed up. They called their insurance company and canceled their homeowner's insurance policy as of Friday because that's when they went to the closing attorney's office. Folks, is that closing?
No.
No. Closing is when those documents are recorded. So literally they have $1 million home sitting there now that has no insurance on it. Or they've got to pay to get a new homeowner's insurance policy issued for the, whatever number of days until hopefully it closes. Don't do those kinds of things. I cannot stress enough. I don't know why people are like this. I really don't. People are like this about the silliest of things, utilities, which is not even about insurance. But you'll have sellers that want to cut the utilities off as soon as they go under contract. No. And they'll say, oh, well, I've scheduled the utilities to be disconnected for the day of closing. No again. Because it might not what?
Close.
It might not close. Call them after. And if your clients complain, hand them a $5 bill and say, listen, I got you covered for the electricity for the extra day. Seriously. It's not that big of a deal. You wait till after closing to do those things. You make sure it's closed.
How are you going to, or how is the buyer going to inspect the property without working utilities?
And that's exactly the point. How's the buyer going to do their final walkthrough with a flashlight? How are they going to make sure the buyer go in this and think of it? And also, listen, forget the legality. It would be a
seller breach.
It would be. But forget the legality of it for just a minute. Isn't that just common courtesy? If you were moving into a new house you bought, wouldn't you want the daggum garage door opener to work when you go over there for the first time? Like, there's no reason to shave things that close. There really is not. Leased property still needs to be insured. And yes, the insurance will probably be more expensive. I think that's one thing that people are not prepared for when they become landlords. They don't understand that the insurance costs go up when you lease that property out. And the reason for that is it's been shown time and time again that tenants do more what to property, folks?
Damage.
Rebuilding Chevys in the living room.
That's exactly right. Or, setting things on fire accidentally. Do you know that a leased property, this is no lie, this actually comes from the Insurance Institute and their studies. A leased property is 75% more likely to catch on fire than an owner occupied property? Isn't that crazy?
Wow.
That
Mhm.
just
Yeah.
it just shows a level of carelessness that gets not every tenant, but obviously there has to be something to it, or you wouldn't be 75% more likely to have a fire in leased property than you do in owner occupied property, right? People leave candles burning when they wouldn't if it was their house. People they just do more risky things, and
No
so
private.
the insurance is more expensive. Okay, the insurance is more expensive when it's leased out. So what does
Makes
this
sense.
hazard insurance cover? I'm sorry, Seth, what was that?
Just saying that it makes sense.
Yeah, okay. It does. I agree. What does hazard insurance cover, or homeowners insurance? You will often hear hazard insurance referred to as homeowners insurance. It means the same thing. It's the reason we should technically refer to it as hazard rather than homeowner, though, is that if it's on commercial property, it's obviously not homeowners insurance. It's just, hazard is correct no matter the type of property you're talking about. But it covers fire, storm, wind damage, flooding from plumbing issues. Let's talk about this one right here. If a pipe bursts, that is a flood. That is a flood that is covered by most hazard insurance policies. If the creek rises and comes into your house, that is also a flood. That is not a flood that is covered by most hazard insurance policies. This is one of the things you should always learn to mention to particularly first-time homebuyers. I think many homeowners are shocked to find out that their hazard insurance provides no coverage whatsoever for rising water. Rising water is not a covered hazard under the vast majority of homeowners insurance policies. That doesn't mean you can't get insurance. We're going to talk about it later in the class, but it would be separate insurance. It's called flood insurance. And in some property, anybody can obtain flood insurance. Like I got it on my house just for the heck of it. And you know why? Because my house is so highly elevated. You know how much my flood insurance was when I checked?
$100.
It was $112 a year for flood insurance. But now let me tell you something. If my house floods, all of Cary is gone because I'm literally on. There's not very many hills in Cary, but I'm on the top of one of them. Anybody that's been to my house will be like, "Oh my God, your driveway! Oh my God, your driveway!" It is flat at the top, but it's one of those ones that you need like hiking gear to get. We're up on the top of the hill up here, and so if we flood, we're in trouble. But there are going to be some properties that are going to require flood insurance before you can get a loan. If you're in a low-lying area that's prone to flooding, you can anticipate having to purchase separate flood insurance, and it will not be cheap. If it's required, it will not be cheap because and if you think about it, how bad would it be to find out that your home was just, I had an agent I think it was last year or 2 years ago. When did Florence come through? 2 years ago? 2 years ago, right? Florence came through 2 years ago. Agent friend of mine in Raleigh sold a new construction house to a lady 2 weeks before Florence. And the house is outside of Fayetteville. The house flooded from the river, and the lady did not have flood insurance. Brand new house, had owned it for 2 weeks, and it literally destroyed the entire first floor of the house. Every piece of flooring, every piece of insulation, every piece of sheetrock had to be ripped out with no insurance on a brand new house. So I can't stress enough. Yes, Russell, like New Orleans, like any place. We get this in Eastern North Carolina too, and so anywhere where rising water poses a potential hazard, You should have separate flood insurance policies because it's not covered under a standard homeowner's policy. There are several different types of homeowners insurance policies. You don't need to study them. This is just more so you don't freak out when you see them, if you see them mentioned on a test. HO2 versus HO3, HO4 policies. The HO2 policy is what we call a named peril policy. In other words, the only things that are covered are the things the insurance company lists in the policy. If aliens come and squash your house with a UFO, it's only covered if your policy literally says aliens squashing your house with a UFO is covered. In other words, the policy is very specific about what it covers. Does that make sense for everybody? That is not the most common way of insuring property. The most common way of insuring property, and so you want to tie this back to an earlier idea in the class, this is almost like fee simple determinable versus fee simple subject to a condition. One of them is very specific about what you can do, what is covered, and the other one, it says everything except this. Does that make sense for everybody? So the HO3 policy is the everything except. The HO3 policy covers everything unless it is specifically mentioned in the policy that that thing is not covered. So is it most likely, let's just do the aliens squashing your house with a UFO. If you have an HO2 policy, most likely is alien squashing your house with a UFO going to be covered if you have an HO2 policy?
No.
No, because I can't imagine that being listed in the policy. Is everybody following me on that?
Mm-hmm.
If you have an HO3 policy, would alien squashing your house with a UFO most likely be covered?
Yes.
Yes.
Yes, because again, I can't imagine the policy listing that thing, except in HO3, it's a good thing when it doesn't list it, because the only things listed in HO3 are things that are what?
Not
Excluded.
covered.
Excluded or not covered. What do you think based on the previous slide? If you have an HO3 policy, what's the number one exclusion on HO3 policies?
Does not cover floods.
Flood.
Doesn't cover rising flood water.
Rising flood water.
Doesn't cover rising flood water. Interestingly enough, they usually also say things like riot are not covered. Those are usually some of the things that are exclusions that are named. If there's a riot, for example, there are exclusions there, but overall, you'd rather have an HO3 policy than an HO2 policy, because the HO2 policy is probably going to leave you with some significant coverage gaps. And at least if you have an HO3 policy, you know exactly what your gaps are, so you could go try to get other coverage for those things. If you look at your HO3 policy and it says, okay, these three things are not covered, you know, number one, I'm not covered for those things, or number two, maybe I need to see if I can buy separate insurance for those things if I want.
Okay, Seth, there's a term that they use in insurance about stuff that's not covered. That's like a freak of nature. A friend of mine in San Francisco had an airplane crash into her house, and it wasn't covered under her regular policy because they had this exclusion. I don't know what it's called.
Like act of God.
Like God.
Yeah,
Yeah.
there you go. Act of God. That's it.
Act of God. Why is God always so mean, by the way? Every time
I don't know.
somebody talks about an act of God, it's always something terrible. I'm like, this
He
no.
covered.
You make God sound like a bad dude. I mean, really, seriously. But that's the difference. Is everybody okay on the difference between an HO2 and an HO3? HO2 basically has to tell you exactly what's covered, and HO3 has to tell you exactly what's not covered, because anything that's not listed is covered, right? So as an example, somebody asked me last week, they said, well, if somebody breaks in my house and steals my watch, is that covered under my homeowner's insurance? I said, okay, what kind of policy do you have? And they said, well, I have an HO3 policy. I said, well, does it say specifically in your policy that somebody stealing your watch is not covered? No, then it's covered. Does that make sense for everybody? The only things that are not covered under an HO3 policy are the ones that are specifically listed. Renters policies are HO4 policies. These just cover personal property. They don't cover the structure at all. The landlord, the owner, would still need to have a regular HO2 or HO3 policy for the structure, but the tenant would get the renter's policy. And even for short-term rentals, even technically speaking, even if you're doing a VRBO or an Airbnb, folks, your stuff is not insured. If that place catches on fire and your laptop burns up in it, the insurance of the property is not going to pay for your things, because your things as a tenant are not covered. Your personal property is not covered under that policy. Personal property is covered under most HO2 and HO3 policies, but only personal property that belongs to the property owner. Does that make sense for everybody? So it doesn't cover things that happen to be in the property that belong to other people. It covers things. So as an example, I like to point this out. If your house catches on fire and burns down, and your car is in the garage, and you have an HO3 policy, is your car likely covered under your homeowner's insurance if your car is parked in the garage, your house burns down, and burns the car up with it?
Yes.
It could be.
Yes.
Could be.
Yes.
Mhm.
But if your tenant's car is parked in the garage of a house they rent from you, and the same house fire happens with the same result, is the tenant's vehicle covered under the insurance policy for the structure?
No.
No, it is not. Not unless the tenant has a separate renter's policy, because that is personal property that belongs to the tenant. Does everybody see the difference there?
Yeah.
Okay. The personal property of tenants is not covered under the owner's insurance property, only the personal property of the owner. Okay. Everybody good with that statement? Okay. And that's why we have a thing called renter's insurance. That's why we have renter's insurance. Condo policies are a little different. You don't need to know the HO6 part. Just know that condo policies are different because they don't cover the structure. They cover walls in. Because again, when you buy a condo, what are you buying?
Airspace.
Just airspace. And yes, renters policies are cheap for the reason that they're only covering personal property. They're not covering the structure, and most of your major loss is from the structure if you have a major loss, a flood or something of that nature. One of the things I think they may ask you about on the test, because there's not a lot they could ask you here, is a clue report. Every property has basically a history, and the insurance companies cheat. I didn't say that out loud. They share information with each other. The insurance companies have a database called the CLUE database. It stands for Comprehensive Loss Underwriting Exchange. And basically, every time a claim is paid against a property, the insurance companies upload the details about that claim. Here's what that prevents. If you have a property where there's 3 or 4 claims for loss, and the insurance company drops that home, it prevents either that owner or potentially the next owner from being able to just go to a new company and get a new policy as if nothing ever happened. Does that make sense for everybody? In other words, the claims are not going to follow the people, they're going to follow the property. It's almost like they're pertinent to the property. And so one of the things to keep in mind is if your buyer is purchasing a property, and this is one of the reasons why I'll point this out. If there's ever been a flood, like a burst pipe, or a fire in the property, that's a material fact that needs to be disclosed forever. And TT, the Carfax is a great analogy. It's very much like a Carfax. And here's why that's a material fact. Even if the flood issue has been repaired, all the stuff's been replaced, could that impact the ability of a future buyer to obtain insurance on that property potentially?
Yeah.
Yes.
Mhm.
And that's why it remains a material fact. Fire is exactly the same way. You may see a home that's been completely repaired and the insurance paid for the repair, but the next owner may struggle with getting insurance, or at least have to pay a really astronomically high rate to get insurance on that property because of the claim history. associated with the property.
In California, it was one claim. Is that true here?
They don't have any particular rule here. The insurers are free to make their own decisions, but I can tell you when they see multiple claims, they get really nervous. And that's why you should always think, I've had people say, oh, well, a tree fell on my house, I'm going to call the insurance company. I said, no, wait a minute now. You better think about like how much damage did it actually do? What's the cost? It might make sense for you to just pay to have it removed yourself if it didn't do a ton of damage, because you file that claim sticks with the property. And now that when you get ready to sell your house in a few years, it may impact your ability to sell because somebody may have a problem getting insurance on the property because of that claim, especially if you have to have more than, maybe you have another claim next year for something you have to make a claim for, like a fire or something like that. Does that make sense for everybody? So you don't want to have this history of claims against the property.
Yeah, get the insurance, but God forbid, never use it.
Well, that's exactly right. They want you to have it, but not use it. That's the goal of every insurance company since the beginning of time, right? We want you to have the insurance, but never use it. That's,
Travis.
Yes.
So I see on the second bullet, it says that their clue report may not be insurable at all.
It says properties that have several claims in the clue report may not be insurable.
Right. So does that mean that there's a possibility that there would not be a way to get insurance on a piece of property at all?
Correct. Yes.
So, but they have to have insurance.
Well, and they don't have to have insurance. They have to have insurance to do things like get loans and do those kinds of things on property. And so what it can functionally do is make a property unsellable. If you've got a property that because somebody can pay cash and not have insurance. That's nobody requires you to have insurance, but most people don't want to do that. Where you run into really even bigger problems is when somebody wants to borrow money and the lender will say, there's no way we're giving you a loan on a property that you can't get insurance on. And so that eliminates that property from anybody who's getting a loan.
Okay, I get it.
Okay.
Hey, Travis, I'm sorry. Did I mention I was a victim of that clue report?
No, you did not mention that. That's interesting. What happened?
Well, I have some rental property, and we had over the past year or so hailstorms. So I had called. Well, at that time I had Liberty Mutual, and I called to have them go inspect the roof. And I didn't have any work done. I just wanted to inspect it to see if they would cover it. Blah 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 blah. Well, I recently called State Farm to see if they would give me some insurance on that particular house, and they looked in what you're describing, the clue report, and said I had too many claims, but the dollar amount was zero. So the lady explained to me just having the insurance company send an individual to look at your property is a claim.
Yep, they upload it. Yes.
So she also explained to me the only way to get out of it, and I haven't done it yet, you have to write. I don't know if you mentioned there's a company that is over the clue report.
Yeah, and I don't know the regulatory body, but there is one where you can, request to have things removed.
Exactly. Yeah.
Insurance commissioner.
And if you can't get, and if they won't do it, I think the only other avenue you have is to contact the insurance commissioner.
Correct. You can go through the North Carolina Commissioner of Insurance, and they can certainly direct you in the right way. Isn't that crazy though?
Yes,
he never even actually made a claim. He didn't even ask the insurance company to pay anything, but they've uploaded essentially that history saying, the property was damaged in this way, and because what they're essentially doing is warning other insurance companies, you issue this policy and this person may immediately hit you with a claim because they've already pointed out that there's damage to the property, which is totally not what you were trying to do, but that's the idea behind it. That's the idea behind doing that. Yes, it's a very frustrating thing when something comes up on the clue report. We all good with that? Okay. All right, good. As I mentioned before, for test taking purposes and for real life purposes, owners need insurance. I think if you get any insurance question on the test, and listen, 1 is max. You might not see 1 at all, but 1 is max. It's going to be about the owner needing insurance, and particularly when they do weird things like a seller who leases back a property. You all, I realize, don't necessarily think of the broader implication of things. That's natural because you're learning it. You're trying to drink from the fire hose. But closings do not always mean handover of possession. Okay? Closings don't always mean. Are there times, as an example, where the seller needs to stay in the property for a couple weeks after closing? They want to close, but they still want to stay in the property.
Yes.
Yes. What do we call them for those 2 weeks they stay in the property after closing?
Rent back.
Renters, tenants.
They're tenants. It's a rent back, right? It's a lease back. It's a rent back. They are tenants. Therefore, they no longer have homeowners insurance because they don't own the property anymore. So two things now happen. Who does need to have homeowners insurance during that rent back period?
The new owners.
The new owner, the buyer that just bought the property, correct?
Mhm.
Yes.
And the tenant needs to have renter's insurance. And they're going to look at you like you're crazy. I'm not really a tenant. Renter's insurance is for somebody who lives in an apartment. No, renter's insurance is for anybody who is renting. And I don't care if you're renting for a day, a week, or 10 years, you're a tenant for the next 2 weeks. And if you want your stuff to be covered, you need what?
Renters
Renters
insurance.
insurance.
Insurance. Does that make sense for everybody?
Mhm.
Because otherwise your personal property is not going to be covered. So make sure that you understand that. If the property is going to be one that is subject to flooding, the place to find that out is with FEMA. FEMA draws the flood hazard maps. FEMA is the same FEMA you hear about during hurricanes and storms, the Federal Emergency Management Agency. They are tasked with the responsibility of drawing flood maps to decide which properties are more likely or more prone to flooding than others. You can always go to their website, which Seth has linked you to there in the chat if you'd like to search for property and see if it is located in a flood hazard area or not. If the property is located in a flood hazard area, the lender is very likely to require that the owner purchase separate flood insurance. It is very likely that you would see that as a requirement if the property is located in a flood hazard area based on FEMA's maps, that the property owner, in order to get a loan, would need to purchase or be required to purchase flood insurance. I want to be clear about that. There is no legal requirement for somebody to purchase flood insurance. It's a requirement tied to a loan. Those kinds of requirements are almost always tied to financing. Does that make sense for everybody?
Yeah, and they want you to get the policy for the maximum amount the insurer will write. And they want it to have, and so the maximum the insurance company will write is 250,000. So
in a lot of cases, that's exactly right. Well, and that, folks, believe it or not, is all for the insurance unit. Look at that.